All right, everybody, welcome back to another brand new YouTube video. Today is May 5th, and we're going to be going over supply and demand. As you guys know, we have done the strategy series. This is going to be part 3 of the strategy series where we start on supply and demand. Following supply and demand, we will go into Wyckoff, and then the last few videos will be an all-in-one kind of understanding of how we look to trade. So if you guys have not seen the start of the strategy series yet, please go feel free to watch that. You can click on my page, click on the playlist section, and you will see it in there. Or you can click the link in the description below. I will be putting it there. As always, you can find me on my socials right here. And if you guys wanted more information and wanted to live trade with me, be in a community where we have giveaways, and be in a community where we do homework with our students, and we just chill for that same exact thing, go ahead and feel free to join the 1% Academy private mentorship at discord.gg/leverage. So if you guys are interested in that, please feel free to do that. But without further ado, let's jump right into the video. Supply and demand. So what is supply and demand? Does the market move based on supply and demand? And how can I spot specific areas of supply and demand? These are going to be three of the most important questions when understanding supply and demand. But my goal is to be able to break it down in the most simplest form for you guys to be able to understand it and understand the theory behind what we do anyway. So let's go ahead with the first question, which is what is supply and demand? Supply and demand is going to be a theory, and that's very, very important, understanding that it's just a theory on how the market moves. This is not exactly how the market moves. It doesn't move based on ICT. It doesn't move based on this. It doesn't move based on that. It moves based on human manipulation, on emotion, right? So that's how the market actually moves. But we use supply and demand. We use other concepts to be able to understand how we can figure out certain areas where price will react off of, and that will allow us to get into trades, taking it to areas of supply or demand. So it's a theory on how the market moves. When there's more demand, there will be higher prices. So if you have, let's say, 10 apples, right? And that's the entire market for the apples that you have in your area. If you only have 2 apples, the price of those 2 apples are going to be much more increased than they would be if you had 20 apples, right? You'd have a 50% decrease. So more demand is going to be higher prices. More supply is going to be lower prices. So when we're looking for areas of supply, we're looking for areas where we can catch a lower high, catch that lower high trade, and then take it to a lower low from the market structure video that we talked about as well. When we're looking for areas of demand, we're looking for a break of structure, looking for areas that sponsored that break of structure, which is going to be your area of demand, and then looking to take it higher overall. So areas of supply and demand are going to be areas where we can look for price to react off of. Now, does the market move based on supply and demand? Now, my answer for that is going to be yes and no. This is not the end all be all of what works, meaning there are multiple things that works in trading. You can have triangles, you can have this, because understanding that these are all just theories, patterns work, everything works in understanding perspective, right? So if we have a system that we can understand, we can use that system to repeat it over time, and that will allow us to understand what will be profitable for us in the long run. So I'm not saying that it only moves based on supply and demand. I'm not saying that this is the end all be all. Instead, I am saying this is just a way of understanding perspective, to be able to notice the charts and to be able to take trades from there. Now, the final question, how can I spot areas of supply and demand? Now, the easiest and most simple way to put this for spotting areas of supply and demand is just that any area of consolidation that sponsored a new high or low. So a easy example of this would be an area of supply. As we are creating higher highs and higher lows, notice our market structure here. We're creating higher highs, higher lows. Here comes a higher high, and then we get a lower low that is sponsored right there. So we get that lower low, that's that new low that is sponsored, candle before candle that did that is going to be our area of supply or demand. In this case, it's going to be supply. So we have that area of supply that is created. We can see price react off of that and then continue its downtrend from there. So just any area of consolidation that sponsored a new high or new low. That will be how you can spot areas of supply and demand. Now, to further that on, let's talk about what that looks like, just showing examples of drawings, and then we will show examples of actual trades taken within the 1% Academy server that were live trades, so you guys will be able to understand those trades taken as well. And then following the next one, tomorrow we will be dropping a part 2 with more examples, more trades taken with actual showings from the server, and that will allow you guys to understand supply and demand. And then following that, we'll get into Wyckoff, and we will get into the other theories, and then we will end it following that. So let's go ahead and now get into our drawing examples. All right, as far as drawing examples go, we're first going to start off with a downtrend. So a bearish downtrend, and then we will move into the uptrend. For a downtrend, whenever you want to spot areas of supply and demand, the first thing that we need to look for is going to be a liquidity raid. So we're going to look for a downtrend, a sharp move up before a break of structure down. So a perfect example of this is going to be right here, where we get a sharp move up before we get that break of structure to the downside right here. So a liquidity rate is going to show your real areas of supply and demand versus the quote unquote fake ones. So for a downtrend, look for that liquidity rate to the upside. Notice how this is a low, a lower high, a lower low. So if we want price to hold that lower high and continue to the downside, we just need to look for price to hold this. It comes up, taps it once, liquidates that, and then breaks structure to the downside. And now you have your actual area of supply, which is going to be right here, where you can take that short trade to the downside and continue it lower. Now, for the uptrend, it's going to be the same exact thing, but you want to see a sharp move down before a break of structure up. So a sharp move down before that break of structure upside. So put that down as well. Now that we understand that we are looking for that sharp move down before the break of structure upside, all we have to do is watch structure as it's being built. Notice the high, the higher low. Here comes the higher high. We get an area of consolidation, and then here comes that sharp move down, that rate of liquidity into the lows, but still holding that previous strong low that caused that new high. So now you have your new area of demand that is created once you get that break of structure over those next highs, and you can catch that trade and continue to take it to the upside. So supply and demand can be very simple as long as we understand our market structure, and then we look for those rates of liquidity within areas of premium for shorts and within areas of discount for longs. We'll talk about premium and discount as well in here in just a second, but understanding this is going to be very, very important for figuring out your real areas of supply and demand versus your fake ones. All right, so now moving on to a few examples. We're going to do two examples and then getting on to the next one, we're going to use the real trade examples from my actual server. So understanding this right here, right, we're just following market structure. We can see how we create a high, a lower low, a lower high, and now a new low. So what do we look for? First, we look for that market structure. So we look for a break of structure. There is your break of structure. A high, a higher low is created, and then we sponsor a new high right here. So once that new high is sponsored, you look for the candle before candle that broke structure, which is going to be this candle right here, for you to be able to take that entry upon and then take it higher into areas of demand. Now, again, you may be looking at this and saying, oh, this is just picked, right? You're cherry picking it. You just looked on the screen somewhere, found the one that looked perfect and went with that. I encourage you to go back test this. So go back test this, go look and see if this actually works within your charts as well. And that will allow you to gain the confidence as well as understand how you can see it when it happens. So another supply example is going to be us moving back. So we can move back right here. We can look for another example here. Let's talk about a possible reversal. Okay, so we have an area of supply and demand that is right here. We get a break of structure to the downside right here, and an area of supply from this break right here is going to be shown right here. So once we get that candle before candle that broke structure, we can look for that high. Now, this also tells you when your right areas of supply and demand are. For example, right, as you can see, overall structure is still showing that we are bullish. So we have a new high that is created, and we are coming down to create a higher low. So as we are coming down, we're creating lower highs and lower lows. And then we get that break of structure with this candle right here, new area of demand within here. Price reacts off of that and starts to move higher. Because price is all the way bullish, once it comes into this area, all we have to do is wait for that break of structure. Now notice how it does not break structure and it still holds this strong low. It comes up into that, it starts to absorb it, comes back down to create a higher low, and then immediately breaks structure to the upside after that. So this can tell you which areas of supply and demand are holding and which ones are going to be true to that as well. This is a great example of that. But again, I do encourage you to go back test this so you guys can be able to see it yourself and be able to see it on your charts, because that will help you guys out the most when understanding these videos, when writing down the notes. It's just gaining the experience, going in there and seeing that when it happens and when it occurs. So that was that. And again, if you guys were interested in joining the private 1% Academy mentorship, where we have tons of students that we go through, we take the trades live. You guys can see that we take those trades live right here. They're all sent out. We have live trading within the server. We have the MVPs. We have the apprentices. You guys can see the certificates, P&L. You can see all the reviews from the people as well, from accounts that were passed, trades that were taken, and everything similar. So if you guys were still interested in that, please feel free to join with the link in the description, or just go into your browser and type in discord.gg/leverage, and that will bring you the invite for this specific server. So with that said, thank you guys so much for watching today. If you guys had the patience to make it to the end of this video, you will have the patience to trade. The part 2 is going to be out tomorrow for supply and demand, where we use the real-time examples from actual trades taken in the 1% Academy. And if you guys found value from this, please like and subscribe for more. We are very, very close to reaching the goal of 500 subscribers. And we are on that road to 1,000 subscribers. So again, I appreciate everybody who joined and watched this today. I will catch you guys on the next one. Peace out, everybody, and have a great rest of your day and or night.